Everybody, throw your country up in the chat. I always love seeing that. Let me know where you're from, fam. It's so cool that we can all step on the gas together. Okay, let's say accept here. Throw your country in the chat. Country in the chat. Country in the chat. ADXMA. Okay. Here we go. So not a good strategy. You can see right off the bat. Why? Well, there's a bunch of metrics here. And we'll go over all of them. So let's go over all these metrics here. And you can see it didn't do well. Negative 54% return. Buy and holds 283%. And this is from 2000 to 2024. So it's a lot of data. Can you please go ahead and explain all of these different stats to me step by step so I can fully understand them? And then go ahead and build in the optimizer into backtesting.py so we can see if we can get the strategy better by optimizing it. Okay, let's go read through this. So first off, I'll tell you what I look at. So profit factor, I look at that. I want it to be like above 1.5. Expectancy, I want this to be above 0.2. So it's at negative 0.65. So that's why I was able to tell you right away, oh, it's not really a strategy for me. You can see worst trade, average trade. I don't look at those too hard. The thing I do look at is the return versus the buy and hold. A lot of people will totally dismiss a strategy if it doesn't hit the buy and hold. But before I do that, I look at the exposure time. Because if this strategy returned the same as the buy and hold, for example, but the exposure time was only 37%, then I would think it'd be better. In my mind, it's better than a buy and hold strategy because you don't have exposure to the market. So you have less risk and you have capital that you can use. See what I'm saying? So this lost 3.1% per year. And remember, the name of the game, actually, I haven't even told you this yet. The name of the game is to get so many backtests up that you find winners. I once had somebody come to me and say, hey, Moondev, I tried 20 backtests and I only found one that worked. I don't think algo trading works. And I was like, sir, you literally found one that worked out of 20. That's actually pretty solid. That's 5%, dude. And he said, oh, you're right, actually. I guess I did find that one that works. So at the end of the day, it's a numbers game, and then it takes a lot of shots. So I could sit here probably for 4 hours, test 20 back tests, and find nothing that works. But my expectations are correct. Because I know if every back test that I ran worked, everybody in the world would do this. It'd be too easy.
Damn near anything we could think is real. And if it's not, we could create it. See, that's the gift we were given. To evolve, advance, create. I create my own world.
I'll first explain each stat in detail so we can understand them. Duration. Okay, let's just start from the top. This is the start date, end date. The duration here was 8,700 days. So that's actually a good amount of data, 24 years in total. The performance metrics here said it held the position. Exposure time was 37, about 38% percentage of the time we're in the market. The equity final here is 459,000, so it's down. The final account value, it started with 1 million. The peak equity, so you can see it had a little bit of a run, 1.7, 1.17. Nothing crazy. Return overall is negative 54%. The buy and hold return is 283%. This shows our strategy underperformed. Return annualized is negative 3.18%. Volatility here. Yearly price fluctuation is 12%. Risk metrics, so these are important. Sharp ratio, Sortino ratio. Sharp ratio is looking at the upside and downside. risk adjusted return. Higher is better, zero is poor. Sortino is looking for the risk adjusted return as well, but it's only to the upside, which is better in my opinion for crypto specifically. Kalmar ratio relative to maximum drawdown. So it's like Kalmar, I believe, is the return divided by the drawdown. Max drawdown is how far your account went down. Biggest peak to trough decline. Average drawdown, average peak to trough decline is 19%. There's 109 trades in 24 years. Not a lot. Not a lot. A lot. Everybody wants to do HFT, but I wouldn't go after HFT to start. Best trade, worst trade, average trade, max trade duration. So 94 days is the longest we held. Average trade duration is about 30 days. Profit factor below 1 means we're losing money. So that's why I look for 1.5 minimum. SQN, system quality number, negative is poor. So let's go ahead and optimize the ADX length, the MA length, and the ADX threshold. So what is optimizing? Well, optimizing allows us to go ahead and kind of test like, okay, here in the ADX length, we're testing 14 with the 20 MA and the 25. Optimizing lets us test like 10, 11, 12, 13, 14, 15, 16, 17, 18, 20. And around these numbers and around those numbers. And we can just test a ton of back tests at the same time. It's pretty sick. So let's see if we can get this. It says between 10 and 30. We're going in 2-step jumps. And then 10 and 50 in 5 steps. Let's go ahead and try this first. Okay, we got an error here, so let's go ahead and check it out. I see the issue. The problem is with the ADX column name in Pandas TA output. When we change the ADX length during optimization, the column name changes from ADX10 for length to ADX14. Let me fix that. Yes, thank you. So we got the DR up in here. We got Florida up in here. We got the Tree Island from here. Tree Land in the UK. Wake and Bake. Who done it? USA. Atlanta. We got Atlanta up in here. Jersey up in here. I stay watching your content, bro. You low key on the bleeding edge of this stuff, and you inspire me constantly. Thank you, dude. Much love. 777, dude. Thank you, thank you, thank you. Let's keep it going. Let's keep it pushing every day. Okay, so you can see now it's optimizing all of these, and it can take a while. It can take a while to optimize, dude. So let's just let it optimize. Let's give it time. So while this optimizes, what I want to do here is go ahead and answer some of these questions here. So you get el barrio también. Okay, let's go ahead and answer a couple of these questions because I didn't answer all of these yesterday. Okay, here's a good one. Do you always backtest with commissions, fee, and slippage? So absolutely. A lot of people will show you backtests on the internet without fees, and that's crazy. I use double the commission, double the fees, just because to account for it. You can see here that it finished the backtest. That was actually quite fast. Moon strategy original parameters. Oh, but then it got stuck here. Okay, so let me go ahead and optimize this again. I don't want to plot it. Print optimization results. I actually don't even want to run this original backtest. Okay, there we go. So that should be good. Boogie downtown, I die. So it's very important to use fees because fees can absolutely change your backtest results. So be wary when you see people on the internet that don't use commissions or fees. I use double because it helps account for some slippage. Slippage is the price you pay, the difference between the price you pay and what you think you're gonna pay. Because sometimes, like if you're trying to buy like 1,000 BTC and there's only 100 offered, well, you might have to pay a higher price. How do you backtest your algos? Well, there's actually a couple different libraries I use. The first library, I'll give you three different libraries. There's three different libraries that I use to backtest. Let's just go look at them all. Backtesting.py is what I'm using right now. Backtesting.py. Backtesting.py. I like this one because it's simple to use and the data is nice. The data you've seen so far is nice. So it's backtesting.py. How do you get it? Well, you say pip install backtesting.py. Okay, backtesting.py. You just pip install this, pip install. Boom. Okay, another one I use is actually the first one that I use is Backtrader. And you can see Backtrader is pretty solid as well. It's nice and robust. And I started with this and it's good for like multi data strategies. And then the last one here, so that's Backtrader. How do you get that? Well, you just say pip install Backtrader. And boom, just like that. Uh-oh, computer's locking up. I don't know if this is gonna go now. What do I need to shut down? Do I have too much stuff on my screen? Probably. I don't know if we're gonna make it, fam. I think this is it. Technical support. If anything, it's TA. Okay, sick. Sick, sick, sick. Okay. Not the biggest fan of the API, but playing around with it is smooth. Okay, I'll check it out sometime. Put it on the list. Let's call it Tasty Trade or whatever. I've heard their ads before. So that is two different backtesting things, frameworks, and then the third one is Vector BT. A lot of cool kids like this one. I haven't used it too much, but I've started to use it a little bit in some of my bigger projects. Okay, so now the backtest is done here, and we can go ahead and see the best one. Okay, so you can see right off the bat, the profit factor, remember over one is profitable. The expectancy, I look for 0.2 or better. And you can see this is 0.27. Perfect, dude. It's looking good. So trades, 78 trades. Sortino and Sharp are a little low. Yeah, these are a little too low for me. I like to have one or better on both of these. The drawdown's pretty high. Not crazy high coming from crypto, but the return here is 126%, but the buy and hold is 283. Some people will dismiss this immediately. I look at that 84.86. Okay. I don't love this strat, so let's go back to the terminal, dude. Let's go back to the terminal here, and you can see 84% exposure time, 3.4% annualized return. So I would say this one, It's just not it. I would have to come with a different strategy. But the cool thing is I have all of these strategies as well, and I haven't optimized any of them. So let me go ahead and just throw in the optimizer for this one, ADX star. Please go ahead and use the optimization for this ADX star file as well, and let's try to optimize it to see if we can get better results than we currently have. So here, I'll run this back test here. This is just another back test that I built the other day. We're using the ADX and the parabolic SAR. Let me go ahead and hit run here, and you can see the results. It's a negative expectancy, so it's not a good strategy, but I'm curious to see if we can make it a good strategy by optimizing it. Now, what I'm doing is something very risky. It's called over optimization. Technically, I could sit here forever until I find something that works. You can kind of just force it, force it to work, essentially. But that's not necessarily good, dude. It's not necessarily good because everything that works in the past doesn't necessarily work in the future. So let's go ahead and run this here. This is generating a plot, optimization complete, print stats, original parameters, optimization results. Let's just go ahead and mark all that out and let's run it, dude. See, we got a little bit of an error here. So this is good to see how to debug. Please fix. Okay, so you can see here, I fixed the issue. Let's see if it does. Ah, snap. I don't want those to print. Here we go. Should be optimizing now. Seven, 777, dude. The mouse and the weasel. Greed leads to trouble. And while this optimizes, I want to go ahead and answer some of these questions. Do I use a Mac or PC? It doesn't matter. A lot of people use PCs. A lot of people use Mac.